Welcome to This Week in Money. Today, CIBC Wood Gundy's Ross Clark on where Canada stands in the top 7 equity markets. Juggling Dynamite blog editor Danielle Park on whether Canada is truly out of recession. Katusa Research CEO Marin Katusa on how the U.S. push to low oil prices has backfired. We'll talk to Ross Clark right after this.
Unbelievable harmonies, spectacular performance, Bird Dog and the Vintage Electric Band, the ultimate tribute to the Everly Brothers and Simon and Garfunkel in Oliver, October 2nd, in Kelowna, October 3rd. Buy online and save at ontourtickets.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome to This Week in Money, Ross.
Always look forward to it, Jim.
Life sciences were once the darling of the stock markets. Right now, they appear to be the dogs.
Well, they had their fair run. I mean, from 2009 through the spring of this year, healthcare, biotechs, pharmaceuticals were leaders that just didn't give back at all. There was a lot of rotation went on with other sectors, but that life science sector really was healthy up until the spring. And as it started to roll over, we had said to people that would be one of the key items, that if you didn't see a rotation into a new leader, that we could be looking at a pretty deep correction as far as the summer and then the classic swoon into September, October. And this last couple of weeks for the Biotech index as an example, I mean, this index was just shy of 400 in the spring, and during the week this week, it dropped down below 290. So you're talking about a 25% drop in some of the biggest names in the pharmaceutical sector. So it while things are good, everybody's on the bandwagon and the parade is good. But eventually, even the best of stocks become overvalued. The price-earnings ratios, the ability to have decent valuations starts to come into question. And I would suspect that this sector is going to take probably the better part of months and months here before it can really stabilize and do something on the upside.
How are the small caps doing?
Well, we take a look. It was the small caps that really led the way on the downside here through the summer. And if we take a look at that August 24th capitulation low that all the markets had, the pretty good bounce for 17 or 18 days off of that. But the small caps are the first ones to have gone down and made new lows. The Russell 2000 index just retraced about half of its losses off the August low, but now it's just sitting right underneath that. And, it probably has a little bit of buoyancy here in the near term, but it's been the big cap names that are seeming to hold the best at this point. And I think as we move through this normal September-October stretch, which typically puts in a reasonable low, and when you take some of the stress out of the market, you want to see which sectors start to show the best at holding up and which ones have the first resiliency. I would say that right now it looks as though the small caps are not going to be on that list. It will be some of the bigger, healthier names.
Currencies.
Take a look at on the Canadian dollar, had been very oversold for the last number of months here. We took that last nosedive down into last month. I mean, this is a currency that dropped from roughly 85 down to 75 in the span of 3 or 4 months. It definitely looks like it's due for a bit of reversal. And when you see the strength coming back in the currency, that might actually keep a little bit of pressure on the Canadian stocks for now. Prime example of what happens when you have currency action and then take a look at the equity markets would be what happened to Japan in the last couple of years. The initial move by the government there to have the yen devalued and mark it down from the the 130 level down initially to about par against the U.S. dollar. That first year, you saw the downside in the currency affect the stock market there by having a proportionate move to the upside, but only when priced in terms of the yen itself. When you looked at it internationally, it was just holding its own. And it wasn't until the currency had been down for an extended time and had its second leg that you saw the profitability start to come through in terms of some of those Japanese companies and how they then did well for the next year or so into this spring. So when I take a look at maybe the Canadian dollar having a bit of a bounce right here, I don't see that would be of such a benefit to the Canadian stocks.
They did a survey of the top 7 industrialized countries and how their stock markets have done over the past year. Where did Canada rank out of that 7?
Well, right now we're at the bottom of the list. As of this week, the Canadian market's down a good 9.5% on the year. And from the May highs, that's down even worse than that. So this is a tough environment for the Canadians right now, and we don't see an immediate turn here.
Is that something you think the politicians will bring up on the campaign trail?
Oh, sure. It's always the easiest thing to do. And I mean, there's hardly an election going on anywhere in the world these days, this last year, where the incumbents haven't been put to the fire because the economies have been slowing down, and each one of them gets blamed individually for what's going on just on a complete international basis. But the press love to pick up on it. The politicians love to go out and blame each other, and it's like me when I take a look at individual stocks that people might look at. You have to recognize that for all that each one of these companies might have its own story, a lot of the price movement is going to be reflected because of what's going on with the sector and what's going on with the broad market. So I think when it gets down to the state of the Canadian economy, we are a resource-based country, similar to Australia, and you take a look at the price action, the currency, the stock markets, there's a lot of nuances that fit together here.
Ross, thanks for chatting with us.
Nice to be with you, Jim.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. If you have any questions for Ross, his email is ross.clark@cibc.ca. Coming up next, Danielle Park on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome to the show, Danielle.
Hello, Jim.
Former U.S. Secretary of Labor Robert Reich claims the only free market is the one the government regulates. Is there truth to that?
Well, I think that was a very interesting piece he did with Anna Maria Tremonti on CBC. I actually caught it as I was driving into work, and I thought, this is the kind of discussion you don't hear very often, because here's a guy who was originally in the Ford administration, has worked in Republican and Democratic governments, as well as, been an academic, written many books on all these topics. And he was just saying that, which I happen to agree with, that in the last, say, 20 years for sure, the policies have moved away from the center and much more towards the extreme right and the extreme left, and that, as much as the right likes to criticize the left for social policy spending and racking up, debt and taxes, the truth of the matter is that the right has been enriched greatly by the crony capitalism that's been going on, and by the subsidies that have gone directly to business and markets and, all this intervention. So we really have to get back to a position where the government is downsized and is left just putting a few hard lines on the road, Jim, and not getting into, the deliberations with, the nuances of all this stuff, leaving free market forces to themselves, leaving capitalism to what it does does best, which is, creative destruction, bad players going bankrupt, poor managers suffering their own consequences, good managers and risk management being rewarded with financial success and durability. And that's really, the system has become very weak on both ends of the scale for the same reasons, and that is that there's been so much controlling of public policy from special interest groups. I put on that other piece today, which was with Steve Paikin, a professor of economics from Italy, but visiting the University of Waterloo this week, and she was talking about how government can help support innovation in the economy without trying to control it or drive it. There needs to be this collaboration between some government spending on behalf of taxpayers in a long-term interest view, and corporations who are going to find free market solutions to these problems. That quote that the world's biggest problems are the world's greatest opportunities when it comes to business. And that's true. So I think we're at a cross in the road right now. I was at the local candidates debate last night in our area for the federal candidates coming up for the election this month, and I was listening very carefully to who was talking about shaking up status quo, because I think strongly that whether you've had a decade of conservative rule or whether you've had a decade of liberal rule or NDP, any one particular party, I think what happens over time is the tentacles of the status quo, of crony capitalism, of the, corporations that are controlling most of the policy in the world today start to get too entwined with the government agencies, start to have too much sway on what goes on and how money is spent in the country. I think right today we need a massive shakeup, a massive breaking of those ties so that we can get some creative destruction going again, so that we can take the world, or at least our country, certainly when you talk about Canada, into the future, which will hopefully not look a lot like the economy of the past. In other words, it's time to break free of this idea of being a petrocurrency, of being an oil country, and embrace this notion that we can be a green energy or clean energy country. And that's where I think a lot of both sides of the aisle are kind of agreeing that current system is broken and that the future requires a whole new path. And then the next step is to try and figure out how we can do that without spending insane amounts of money, given the debt and deficits already plaguing the world. So part of that is taking away some of the gifts that have been given to both sides. Part of that is working with the current budget and saying, in Canada, with an era of falling oil prices and probably a secular downturn in that sector, not assuming a bounce back really soon, how best can we allocate our tax revenues here? And that's where this idea of, encouraging innovation in business, but not letting people away with, controlling all the policy at the same time.
Is Canada out of recession? Of course, the federal government wouldn't admit that it was in one in the first place.
No, we're not out of recession. And in matter of fact, interesting that you mentioned that. Because we are so tightly tied to what goes on in the American economy. And if you hear optimists today on the Canadian economy, they inevitably will say that they see, number one, a bounce back in the price of oil, and the reason they do is they believe that that the United States is the cleanest dirty shirt and that Canada will tag along in what they see as a relative outperformance in American versus the rest of the world. It's interesting because the GDP now, which is the Atlanta Fed's calculation, which is a much more real-time calc of GDP trends in the American economy. The consensus forecast right now for Q3 of 2015 is somewhere in the 2.4 range, 2 to 3% range, let's put it, for the U.S. economy. The Atlanta Fed today came out with a guesstimate that's once more below 1%. In other words, although it had trended up a little bit in the last little while, it's now mean reverted right back below 1% as the Q3 growth expectation. And it has a much better track record of being more accurate to the growth trends. In other words, the U.S. economy is slowing down, not picking up from here. And I think that portends for weaker growth in that country as well as in Canada. The price of oil has now retraced back below the long-term support trend that was in play from 2009. And I think that we may indeed find that $45 a barrel range is sort of resistance here, and that we're going to see some more significant downside tests in the months ahead, which means that probably most of the forecasts that people have been coming up with to look at where revenues are likely to be and where job growth is likely to be, all those things are probably too optimistic at this point.
Why does the U.S. Fed insist that we need 2% inflation?
Because the world is very indebted. Essentially, bankers came up with that model, and their whole precept was, how do we keep people borrowing and spending? Because they make the most when people do that. And, how do we keep that gig going? Well, you try and keep it so that incomes rise a couple of % a year, and that way debts will become manageable, or you can make your payments while still affording to live. You have a slight increase in wages in that model. You'll be able to sort of continue to pay and consume at the same time. We've come to another cross in the roads on that model, Jim, which is we've had no real wage inflation for, since the 80s now. And yet people have twice as much debt today. So even with the low rates, that really isn't the issue. The issue is they've now got that much more weight of all this debt accumulated, and they're not getting the wage growth. So you've literally hit a hard return on these growth expectations. So now, in this new brave world where you can't continue to borrow and extend your line of credit to keep your spending going, you go, okay, well, how do we get wages up? Well, unfortunately, we're in a downturn in the economy. We still have a lot of pressure from foreign wages that keeps, deflationary impacts on wage growth in North America as well. So we don't see a great bounce back in wage growth in the foreseeable, let's say couple of quarters anyway. And so now you get this difficult period where people really can't keep up their payments very easily. They can't add to more debt to keep it going. And the Fed's worst nightmare. Here's theorists who came up for the last 35 years. The gig was always, as soon as the economy starts to slow, cut rates and hit the pedal to try and make people consume. Well, after you've done that for 35 years and now you've hit this hard return in the world, this debt limit that the world just can't afford to service anymore, now you got to look at ways to lower the expense side. And this is where it gets really interesting, right? Because now we're back to this whole emission scandal, I think, was perfectly timed for this thesis, which the world is coming to, which is we need to get off fossil fuels, full stop. And this whole idea that you can have, combustion engines that are emitting low amounts really is missing the point entirely. You can have cars that don't emit anything. You can have, not only that, but freer, cheaper, much cheaper energy going to the grid, which will mean that more products can be produced cheaper, which means that people will actually be able to consume while paying off their debts, even if they don't get much wage growth in the next few quarters. So I think the solution here is about how to get a lot more efficient. Not how to figure out how to make people spend more, how to live within the new reality of a constrained income statement. And companies are going to have to do it because company revenues have been stagnating, and they aren't able to get more cash flow. They've already cut a lot of the sort of low-hanging fruit, if you will, coming out of the 2008 recession. So now it's how do we get creative about even getting more efficient? Well, obviously you look at your costs and your inputs and you say, what can we do to make this a lot more efficient? And energy policy is one of the areas where that's a huge expense for business and households and governments and everyone, and how to get that really much more effective and lower energy costs, lower energy prices are actually the solution. Not waiting and hoping that they can bounce back up and we can get higher oil prices, but we need to focus on how to get the cheapest energy possible in this environment to make these income statements work.
The latest model of Tesla, the Tesla X, an SUV model, starts at $80,000, which is a lot of money for a car. But on the other hand, you don't have tune-ups, you don't have oil changes, you have very little maintenance, and to fuel it up, it costs you pennies per mile instead of dollars.
Yeah, or free. It can be free per mile if you literally can fuel it at the Tesla power stations, which are provided, or if you can get solar panels on your own house that can actually be something you can plug into. There was a really great clip, I think I put it on the blog late last week, where it was a actual building that has been built in Germany, I believe it was, where all of the energy Amsterdam. All of the energy is powered from solar on the roof and geothermal in the basement, and all of the employees' cars and phones get to plug into this free energy every day. It's the most effective, energy efficient, and productive per head, per square foot building in the world. And this company is rolling these out all over the place. So it's not only a focus on healthful environment, on how to waste less and save more, but how to, literally get energy for free. And that is a mind-boggling concept. I am convinced that is the solution to the over-indebted world. Not how do we do more financial engineering and figure out how to way to kick this can a little longer or pretend and extend some more, but how do we actually, write off some of these zeros and work down this debt the good old-fashioned way, which is by spending less than we earn. Interestingly, in Russia today, or this week, the Russian government has allowed for personal bankruptcies for the first time ever. And that is, again, out of, I think, a recognition that the global credit bubble allowed people that should never have been borrowing large amounts of money to borrow money. And for a while that looked like progress. For a while that made bankers look like geniuses when they were able to get literally, money out of stones. But now we realize that debt hang is holding back the future. It means we have less money for investment. We have less money to spur, growth. And so the answer here is how to get the zeros written off, worked down in every way you can. In some cases, that's just going to mean bankruptcy, which means assets that were tied to those assumptions of value are going to have to come down. We've seen a lot of mean reversion going on in world commodity markets and in stock markets. We had a really productive quarter in ending September 30. Lots of good downside work happened in many asset markets around the world. Now, people may be saying, is she crazy? Like, that means people are losing money. Yes, some $11 trillion of asset value was wiped off the global markets in the third quarter, but not if you weren't holding the risky assets that were the most overvalued. We actually had a great quarter in the third quarter and made money in our client accounts. It's not necessary to be losing in this environment if you're positioned correctly and you understand this is a secular downturn that we've earned through our indebtedness and habits in the past. We're into a whole new world here. It has nothing to do with getting the oil price back up. To the contrary, it's about getting cheaper inputs, and that's the way back to efficiency and growth. So I actually think it's a very exciting time. And as I say, the Tesla launch, Tesla is a leader to the world. Other car companies have been following his model. He opened his source code. Elon Musk famously opened the source code, threw it out there, and said, "Here's our inside info on how we do this. Go forth and prosper." And he's engendered finally serious competition in the other car manufacturers. The Frankfurt Auto Show had all these, Porsche had a green SUV, electric SUV, all this. So I think the major car manufacturers of the world are the penny's finally dropping, and Lord knows that took a long time. They were stubborn and antiquated with ICE models, internal combustion engine models. I think the world's finally grasping this all dovetails into how we get back to a more sustainable future in terms of financial, never mind in terms of environmental and health. So he's building a car, and yes, it's a very expensive car, but they're on track to bring out a much more affordable model in 2017. And I think I take them on their word. I think that is the plan. And in the meantime, they are encouraging the same kind of innovation in other car manufacturers. And as I say, this whole emission scandal to me is perfect because it just shows that it's a farce in the first place, all this pretending that you can still use oil and be green by using less of it or cleaning it more. Point is, we don't need to use it at all for cars, and I think that's where we're headed.
Does the $9 billion Site C dam in BC make economic sense if more people are going off the grid or are able to make their own electricity?
Well, I think hydropower is going to be one of the key elements. It's certainly a huge element of the grid power in Canada, in Ontario. As it stands, the hydroelectric energy that comes off of Niagara Falls, as an example, is a huge part of the cleaner energy solution that Canada can work towards. So I think, there's going to be environmental impacts and things like massive dams. That all has to be assessed. But I think the goal here is certainly to, first of all, to preserve clean water. And if the plan decimates our clean water systems in some way, or causes massive problems to our water flow in our country and in the world, that has to be taken very seriously, because water is the most critical resource that we have. But the second thing is everything we do here has to be about how to get off fossil fuels and how to get much more efficient with our energy use and how to get it cheaper and sustainable. And so I think hydroelectric will play a huge role in that. So as far as the math of that particular project and whether it makes sense and whether it's being proposed in the most intelligent way, I really can't say. I haven't looked at all the details of that, but I think certainly hydroelectric is going to be a part of this solution, and it has been already. And so I guess that's about all I can say there.
Danielle, thank you very much for chatting with us.
Thanks, Jim. Have a good one.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Coming up next, Marin Katusa on This Week in Money.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Marin Katusa, author of the New York Times bestseller The Colder War and the CEO of Katusa Research. Welcome to the show, Marin.
Oh, it's a pleasure.
The U.S. drive to push down oil prices to punish Russia seems to have a lot of unintended victims. Can you tell us about that?
Well, definitely. Within the U.S., a lot of high-paying jobs have been, lost. That has a big derivative effect. It's a second-order effect that people have to think about. It's not just the low oil prices. People thought, well, great, low oil means people will drive more and spend more. Well, that hasn't happened because the high-paying jobs have stopped in areas like Texas and, North Dakota. And then that has such a big ripple effect throughout the markets. When you think of each rig churning has about 100 to 200 indirect and direct jobs that are very high-paying. We're not talking flipping burger paying. We're talking about $100,000 starting salary and as high as $250,000 a year salary. So those are big, big changes. Another second order effect that the markets I wrote about a year ago that are happening now is when your price of oil decreases significantly, the value of your barrels in the ground changes depending on what price you're valuing those barrels, because it's all about what's economic. So as the price of oil drops down, you actually have less oil that is economic at that lower price. Therefore, the bank's line of credit shrinks when that's revalued. Therefore, the lines of credit are getting much smaller. But like most people, companies budget at the peak of the market, and they are going to have a tough time rolling over their existing debt. Think of it as the mortgage on the house is worth more than the house is today. That's the situation that many of these oil companies are in, where the debt that they own is worth much more than what the actual oil in the ground is worth. So those are all these second-order effects that are going to hit the market and cause a big problem. And everyone expected that Russia would be struggling. I said no. Russia's going to increase their production. That also happened. Russia's increasing their production because the ruble, it's all about your domestic costs. The ruble's been slaughtered by over half, so it's actually cheaper in ruble terms, in Russian terms, to produce the same amount of oil. So a lot of these second-order effects are changing the market.
What about the sanctions themselves? Have they not been hurtful to the West? A friend of mine asked, why are they showing so many ads on TV featuring bacon? And I said, well, that's because the pork producers in Canada and the U.S. have to find a new market because the Russians aren't buying their pork anymore.
Not just pork. You look what's going on in Europe with the cheeses and the dairy. There's been all sorts of effects that, look at Germany. Germany's lost 500,000 high-paying jobs because of the sanctions with Russia. That was an unintended consequence that the Germans are now dealing with. And then ironically, yet the Europeans are still importing Russian natural gas, and more importantly, The Russians are dumping refined diesel in the European market cheaper than the Europeans can even process and refine their own diesel. I make a big joke about this because I was the one that figured out that Exxon actually increased their land position in 2014 by 300%. So if there is truly sanctions, why is America's largest oil company increasing their land position in Russia?
I also talked to an investor who said he was looking at producing stuff in Russia because the labor costs now are so much lower because of the low ruble.
It depends what type of product your friend's in, but, I try to warn Westerners that Russia works in a different way than what we're used to in the West. So be very careful if you want to play Russian roulette.
I think it was potash.
Yeah. Well, the Russians have huge amount of deposits, as do the Belarusians. Actually, Belarus has one of the best potash deposits in the world. So, it's a tough game to get into, big costs, but the Russians are definitely world-class players in that field.
The Saudi Arabians have liquidated $70 billion in assets. Low oil prices finally coming home to roost for them? Definitely,
but they're also a little bit disappointed with America backing the Iranians. So the Saudis are very sophisticated. They're one of the largest investors in the Republican Party. They're not so happy with the Democrats under Obama's leadership. There's no secrets there. But I think not only are they hurting from the low price in oil, they're eating into their reserves because, remember, they fund a lot of these social programs. But also they're trying to teach the Americans and Wall Street a lesson that, hey, you know what? We can also play this game also. So they've pulled out $70 billion, and it's expected for them to pull out another $50 billion by summer. So that's some serious money.
China says instead of quantitative easing, they want to find the culprits who drove down their stock market. Is this a great thing for them to do? Hunt down culprits in connection with a stock market?
Well, hunting down the culprit or finding the culprit may be interpreted as finding or creating the culprit. So if they can create a scapegoat, why not? And it's all part of the narrative. So I'm sure it's part of the bigger scheme of what they got going on, and I'm sure there's political power plays going on. I think that's all part of the grand scheme.
The Chinese have been crazy about snapping up gold for the last 4 years now. Is that going to help them if the stock market collapses in China?
Well, if the stock market collapses, well, I think it already has. I wrote an article in May on my website that went quite viral and was picked up by the mainstream media, talking about, let's look at the valuation. So we've seen a big drop. So we can argue that we've seen the crash. But what the Chinese market's different is they can create their own rules, and they're changing the rules as the market evolves. So be careful if you think the market's going to be, a shorter's paradise. It's not. Secondly, the SOEs, the state-owned enterprises, can do as they please because they're working with a blank check from the government. So that's a major culprit. Maybe they'll reprivatize certain companies that are public if they get too cheap. Why not? It's kind of like the argument today, Glencore might go private again. Well, why not? Capitalism does it. It's part of the whole capitalistic theory. So be careful when you're playing in foreign lands like Russia and China because they play on different rules. And more importantly, the goalposts change when you're playing. So, I really warn the North American investors, if you're going in thinking you're playing ice hockey, you might find out that you started the first period as in an ice hockey game, but the third period might be a UFC. You're in the octagon, so be very careful.
What about China's $18 billion investment in the Alberta oil sands? A big disappointment for them?
Sure it is. They didn't get the pipeline built to the west. It hasn't panned out. But grand scheme, it's irrelevant. It's just part of their portfolio diversification. Canada's a great place to invest. It's safe for investors. And the pipeline didn't get built as they were hoping, so maybe this next cycle, Alberta will realize that they got to put more pressure to build these pipelines because they're sitting in the exact same situation they were 10 years ago.
I saw Hillary Clinton no longer supports, if she ever did, the XL pipeline, and I've seen Republican ads promoting the XL pipeline. Is it ever going to get built?
I think it'll get built, but as I said on TV 3-4 years ago, it's not going to happen in this cycle of political climate. It's not going to happen until after this next election. If Hillary wins, if the Democrats win, it ain't going to be built under their watch. She'll just veto it, and she has precedence because of what Obama did. If the Republicans do win, then I lose a big bet with a fellow friend of mine, a colleague, a guy named Ivan Bebek. We bet a nice bottle of wine. I say the Democrats are going to win. He says the Republicans. I'm apolitical. I think they're all crooks. But anyways, I believe that the Democrats will win. Therefore, the pipeline won't be built under their watch. If the Republicans win, it'll get pushed, but I don't know if it'll actually get built. So I'd say there's a 50% chance that it gets built if the Republicans win. I just don't see the Republicans winning.
I did see a recent poll, though, that showed that women were switching from Hillary to Trump.
It depends which poll you're looking at, which media outlet you're talking to. So it's so early in the game, I wouldn't believe any polls at this stage.
Is there any truth that Trump's getting support simply because we want to see what comes out of his mouth next?
I guess, it's an entertainment factor, right? People have so given up on the established politicians, the professional politicians. Who knows? Maybe things have gotten so bad it's going to go 180 and people are willing to go with someone as, entertaining as Trump. So as a Canadian, like I said, I'd sit back and enjoy that all day long. I think it's hilarious.
You mentioned off air that Glencore was back in the news. Can you tell us about that?
Well, definitely. There's a couple of rumors floating around that Goldman Sachs is going after Glencore. Essentially, they're the second largest producer of copper in the world. They have a high debt. And the question is can they sustain their debt if copper goes below $2? That could be the equivalent of a Lehman Brothers crisis. And that could trigger a big, massive debt implosion in a lot of these commodity producers. If that happens, you'd see the ripple effect, and we have seen it. The Canadians across the board have lost anywhere between 25 and 30% in their market cap in the last 10 days. It's what I call the Glencore hangover. Essentially what happened was a couple of major analysts came out and said, we are afraid of their debt situation, and their equity is worthless. The stock went from essentially $450 3 years ago at its high down to $60. So this is the world's second largest producer. It basically took an 85% haircut. With $30 billion in debt exposed, they had to restructure refinancing, but the cost of that debt's going to go too high. Goldman Sachs is pushing the short on it. Will it get done? And today they came out and said, we're fine. Glencore said, we're going to survive this. Stock bounced up. Now there's rumors that they're working on a reverse takeover to take it private again, because it was a big IPO when they took over Xstrata back in 2011. So nobody really knows what's going to happen, but it's a second order effect of too much debt, and now the commodity prices are too low, and there's not enough cash flow to go around.
I've heard there's some hope for copper because some mines are shutting down because of the low prices, and that might even create a shortage in the new year.
That's music to my ears as a, director of Copper Mountain, which is Canada's third largest producer. The town of Princeton hopes we see higher prices of copper. Our management team have done a fantastic job working with low copper prices. And the one thing I like to remind people is it's not just if you're a copper producer, it's what currency do you produce copper. So for us and the other Canadian producers, we're producing copper in a reduced Canadian currency, so we're much better off than any of the American producers, and this is coming back to haunt the Americans. Not just in the oil sector, but look at it in the major commodities that they produce in gold and in copper and in met coal, thermal coal. They're producing in U.S. dollars, so their costs are still high, whereas our costs have dropped anywhere between 25 and 30% because of our currency.
How long can the U.S. sustain a climbing dollar?
Well, a better question is how long will the emerging markets be down? And it's inversely correlated. And I think it could last another year to 2 years easily.
Why is the U.S. dollar so strong?
Flight to safety. Even though it's a screwed up country and, it's a big debt, it's less screwed up than the alternatives. Do you want to own EU paper? Do you want to own Chinese paper? Do you want to own the UK pound? Which alternative is the yen? So it's the least screwed up currency in the world today. That will change, but that's where it is today.
Russia has started bombing in Syria. What does this say about Obama's foreign policy?
Well, anyone who's read my book, The Colder War, we said that the Russians would team up with Syria and Iran to fight ISIS, and it's a couple of things. It's showing that Putin stands by his allies, that Putin's foreign policy has been successful. It shows that what he said he will do, and now members of NATO who've opposed Russia through the sanctions are now supporting Putin on his move because they do believe that he will get the job done. He's clearly stated that they've given America their chance. They failed. And ironically, what nobody in the West is talking about, all these weapons that have gone to train all these people to fight ISIS, they jumped ship, took those weapons, and joined ISIS. So involuntarily, the Americans have financed ISIS again. This is the second time. So Putin has not just the support of many of the European nations, he's manipulated the situation to his benefit, saying, hey, Croatia, Serbia, Hungary, Germany, Greece, you notice the problem with all of these refugees coming in. I have a solution for you. I'm going to take Russia, and we're going to solve the problem. And Europe's saying, we believe you, where they did not say that to Obama. So Obama's allies, who he's churned on in the Middle East, are looking at it going, geesh, we've backed the wrong guy. And Russia's going to continue to do this. Remember when the Ukraine crisis happened a couple of years ago, I said this is not going to end quickly. It's going to be long because you have to understand the mind frame that Putin and the Russian and the Kremlin work with. This is going to be the same in the Middle East. This is a major opportunity for Russia, and they're going to take and seize the advantage.
Up until now, China has not been a player in the Middle East. Now they have an aircraft carrier in the Mediterranean station near Syria.
Correct, and more importantly, they have been a player because every step along the way in the last 4 years, they have backed Russia on every vote.
Was that a surprising alliance?
No, definitely. Well, for the Americans it is, but for me it's not. And in my book, I trace the connection of what is happening here. It's the new world order of the new political alliances and the establishing of the new relationships in the Middle East. So for me, it's not new, and I say that it's going to continue. And you're going to see the Chinese working with Russia, working with Assad, Syria, and Iran.
Is that because China wants multiple sources for its energy?
Part of it, but it also wants to start demonstrating its global superpower status. Remember, up until this point, people have been staying back, and America has been the cop globally. Things are changing, and sadly, Obama is embarrassed by this situation. So it's a tough situation for the Americans because they've really lost control on their foreign policy in the Middle East.
Can you imagine Trump and foreign affairs?
You know, ironically, if you read what Trump said about Putin, he said, well, I think we'd actually get along, and I'd like the guy, and he'd probably like me too. That was a quote Trump made about Putin. I actually have a feeling that if a Republican does win, there's going to be a new rethink and a restart on the foreign policy by America. If Hillary wins, I think it's going to continue more of the same.
It seemed to me the Republicans weren't scared to work with the Russians, especially when it came to being tough.
Well, there's two sides to that. Initially, the Americans wanted to work with the Russians, and then at the end, when Bush said, "I've looked into his soul, and he's a good man," then at the end he said he's a soulless person, referring to Putin, is what Bush basically paraphrased. Russia's going to do what's best for Russia, and America's going to do what's best for America. At times it may work together, and at other times they'll be at opposition. That's the trend. It's going to be what you'll see. That's how it's going to be for the next 10, 20 years.
Will Volkswagen shares bounce back from their current disaster?
Well, I think there's going to be more issues moving forward, and I think it's going to take a little bit of time, but I think you can look at the BP situation as it never actually recaptured its high, even though oil went to over $100. So I think that's where you're going to see Volkswagen. People are going to question how big is the fine going to be. Until the fine is determined, I don't see it coming back to its highs.
Marin, where can people find out more about Katusa Research?
Just come to our website, katusaresearch.com, and all our information is for free on our website.
Thanks a lot for chatting with us.
Oh, it's a pleasure. Have a great week.
My guest has been Marin Katusa, author of the New York Times bestseller The Colder War and CEO of Katusa Research. That wraps up our show for this week. Thanks to our guests, Ross Clark, Danielle Park, and Marin Katusa, and thank you for listening. Comments or questions for the show can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.